Good morning. It is March 27th, 2025, and today was a range day. And this is a look at the daily chart. Uh, I think we're going to go lower, but I think what's happening right now is there's just some hesitation uh, to go short because of this trend line. I just saw this. I didn't see this earlier. But I'm guessing that's what's happening. There's an hour and a half left until the market closes to the public, so a lot could change. We could, uh, the floor could fall out, and we could sell down to 100 points. But right now, this is how it looks. Let's take a look at the 2700 tick chart. Here's something I want to say, just for my personal growth, is this looks like a range day. It looked like a range day. We have this big down, and then you get this big up, and uh, you know, it makes sense that it sold off. To me, this looks like a level of resistance. Um, so I think it makes complete sense. But I never used Fibonacci retracements until today, and I think it'd be very wise to buy when you're in this bottom box and to sell when you're in this top box. And you wouldn't have this drawn for this rally, but after this rally, that's when you could draw it. And I think this is a very reasonable place to sell. And you can see other people used it too. So you can see they hit all the limit orders right here. People took their profits. It came back up. People sold again. And then when it came back and tested this person a second time, some of them got short. Some people got short again, but most of them got out. And so it rocketed up to this level. And you can see as soon as this thing showed signs of slowing, all the bears came in. Boom, that's a big move. And then when it comes back into this box, what do you get? You get another sell off, the second leg down. And then you get buying. All the limit orders here, boom. And then it sells back to this level, buying, buying. So again, same thing that happened up here, same thing happened here. The people who sold here, the first time it didn't even get to their order, but it came back, tested it, went up, came back a second time, tested it. They didn't like that. Boom. They exited. The bulls bought. And so that's what we're looking at. This is a very useful tool if you understand all that. So anyway, let's take a look at it. So the bias is down from yesterday. There was a sell-off, so bias is down, and 5 o'clock comes in somewhere in here. So you have this correction to the EMA. It looks like we're flip-flopping. Um, First entry, second entry. Unfortunately, not a great setup. Could you take this lower high? In my opinion, yes. You have one, two, three, four, five. You have a 5 bar bear micro channel here. You have 4 bear bars in a row. This one would make 5. It's a lower high. Um, but I think this one is. I think this one is. You want to put your stop above the signal bar, and you want to go for at least 2 times the reward. So, you know, I would say this is kind of low probability because you have potential support right here, but it turns out to be a channel. You get a nice move down to a new low before it bounces. Um, could you consider getting long here? I would say this is probably how I would have it drawn at this point. I would probably have the range drawn like this, is what I'm guessing. Because I wasn't at the chart this morning, but you can see these highs. I think it's reasonable to have your range. I'd probably have it drawn like that actually. And so I do think that this is a reasonable buy. Um, Unfortunately, it looks like if you went long here, you would have gotten stopped out. But when that bull bar closes again, I think you got to take that. Could you take this one? Uh, I'm not crazy about it, but if that's the way your range is drawn, you can definitely take that. And you can see we gapped over this peak. And here, I'll draw the gap. Hopefully I didn't just mess my microphone up. My microphone was tilted down. So look, there's a gap between the high of this bar and the lows of this bar. So this very strong bull bar, we gapped up. That's a sign of strength. And this turns out to be probably, a 10 bar bull micro channel. And so we pull back, and you can't go, I don't think you can go long here. This looks like a tight bear channel. Uh, and I guess the people who entered short on a limit order up here, it tested their break-even price once, tested it twice, and they exited. Uh, could you go long in here? Probably not. You're at the top of a range. So let's draw the channel though, because this looks like a spike. And so spike into a channel. Uh, so yeah, they trapped a bunch of bulls right here. And yeah, as soon as it goes sideways, the bear's loaded up. So if you have that Fibonacci bar loaded up, I don't think I would take this signal bar, even though it looks pretty good. But when this one uh, closes below the EMA, closes outside of this channel, uh, go for go. I think go for at least a 1-to-1 risk reward, and that's a good move. I'll try and make this bigger. Sorry about that. Nice channel break, move to a new low. Let's draw that. It's probably something like that. Break, move to a new low, bounces, comes up here. I mean, you could consider this one. Again, you got to go for at least 1-to-1 risk reward. That's a second entry short. It's in a good sell zone in terms of the range. And then you get a lower high here. I wouldn't take that. Signal bar's not great. Boom. Failed second entry long. Failed second entry long confirms that trend line. That's a good move. You can see we get an overshoot. First entry, failed second entry short, but you're in the middle of the range. You want to be careful, and you can see it just chops people up. And that brings us to right now. So that's how I saw it today. Here's one last look at the daily chart. I hope everyone had a great day, and I'll be back tomorrow.